Hey everybody, wanted to make a video here real quick. I'm in the office on a Saturday, and first let me say that this is not investment advice. This is paper trading and for entertainment purposes only. Um, Real quick, I want to go over the plays from the last video. I had coin puts. They were weekly puts. I was looking to make a little money on a scalp, just a quick pullback and to scalp some money on some coin puts. But I did get the pullback I was looking for, but it was pre-market right here. You can see it was down 4.29% in the pre-market. But I never had a chance to take any profits because as soon as it opened, it just shot right up. I actually ended up losing a little bit of money on those. But I did time this one pretty much perfectly here. I did sell a little bit early, but was able to make 100% on this little pullback right here on some weekly puts. So this is going to be a stock that I'm going to watch quite a bit and next week and probably have a few plays on it next week. So I'm going to keep an eye on it. Bitcoin is getting a little overextended. If we look at it on the 1 day, you can see we're making some negative divergence here on the RSI, and the RSI is up here at around 89, so 88, 89. So um, really oversold here on the RSI, but it could keep moving up and keep building more divergences there on the 1 day. But I think uh, the strong resistance or where it would stop if it was to continue to move upwards would be here at this 28 level, because that's also your 618 here on the Fibonacci, and that was also a big support level for quite some time. So but it could be done right now. I mean, you have this downtrend line, even though it only has two data points. These are two pretty significant tops here, and so I've got them connected. We're there right now, and then also there's a breakdown candle high right here on the 14th, on June 14th, and the high of that candle is 23,300. And if you look, that's exactly where we're at right now while we're making negative divergence on the RSI. But it's not there on the MACD, so that's a little concerning. But nonetheless, I think if Bitcoin can move to 28, or if it can move down on a big pullback, I think there's going to be opportunities, to play either side on coin or Mara or MicroStrategy or some of the Bitcoin stocks. But also with a lot of the tech stocks, I'm seeing this too. But if I so I'm going to remove this Fibonacci tool here, and here it is right over here. So I'm going to click on it and put the oh shit. Okay. So click the Fibonacci tool, 2020 low to the high here. You can see where, you've got this short-term bottom is at 786 Fibonacci level. Now, if I go to oh, real quick though, I want to say the other play was Rivian. It was a 1 day till expiration, just a lotto ticket. Those were worthless. This still hasn't had its hadn't has it its big bounce. I think it's going to bounce to maybe 19 next week. Um, I'm going to be keeping an eye on that as well. But anyways, back to I was showing you with Bitcoin how it bottomed out right around the 786. Also, there's a trend line that I haven't seen anybody with this trend line but me, and it's right here. Starts at July 17th, connected to this candle. It's kind of support here at this at the around the 2020 low, and then we just kind of hit it perfectly here and stopped, and then just worked our way up before we had this move up. So, but as far as the Fibonacci goes, from the 2020 low to the 2021 highs, a lot of stocks, and including Bitcoin, are having these short-term bottoms at the 786. Here's another example. If we look at Nvidia, so Nvidia had this kind of slanted head and shoulders, and when it broke that, it you know finished out this big move to the downside. But if I take the Fibonacci tool over here, put it at, because this is a major low, the COVID low, and then this high here is a major top. That's why I'm connecting the Fibonacci to those levels, and you can see, I mean, it landed at the 786 perfectly. Okay, and also on Tesla. Okay, yeah, so Tesla also had kind of a head and shoulders pattern. You can see it here, right there. There's your neckline. It broke the neckline and had a big move down. But if we take the Fibonacci tool and we put it on the 2020 low, we put it here at the 2021 high. What do you know? 786. This nailed it perfectly. So I was looking at Apple, and this is kind of where I'm going with it. Apple has a similar. I mean, it's not the best Head and Shoulders, but it's if I can remove that one there. You can see you've got a shoulder here, head here, and then kind of an extended shoulder there. And then here's your neckline. So we've, you can see when Tesla broke its neckline and retested it, which is what's going on here. And there's also a downtrend line. It starts from the top here to this next candle, which is where we're at right now. But, Tesla had a big move down after it broke the neckline and then retested that neckline. But like I said, we also have this downtrend line. So this could get interesting. But if I take the Fibonacci tool here and connect it to the 2020 low and to the 2021 high, the 786 lands right about the top of the pre-COVID high here at $80. So that would be a big move down in Apple. I don't know if the market would be able to handle that without going down with it. It was interesting that Tesla, during the whole time Tesla went down after it broke the neckline and it made its way down, I think it was around late September to beginning of January. During that whole time that it dropped 40-50%, the market really kind of went sideways to up. So I don't know if that would happen if Apple was gonna, and it doesn't just because Nvidia and Tesla and Bitcoin all did this doesn't mean that Apple has to do it too. But I always thought Apple would be the last one, Tesla and Apple would be the last ones to drop, and it looks like we've already had that drop in Tesla, obviously, and so now that leaves Apple, and it's one of the charts that looks more bearish to me. There is some charts that are starting to look bullish, but this is one that still looks pretty bearish to me. And so I'm going to be keeping an eye on this on Apple. Again, it would be the 786 would be the pre-COVID highs. That would be a drop of 41%. And from top to bottom, there would be a drop of 56%. If we look at Tesla, from the high to the 786 where it bottomed out was 75%. Nvidia, about 70%, 68, 69%. So why couldn't Apple drop 55? And Apple has earnings on the 2nd, which is a couple of weeks from now. It's on February 2nd. So that should be interesting. I'm going to be keeping an eye on it. And as far as the triple Qs and SPY right now, it's kind of up in the air. I was looking for the counter trend and the move back down, and I'm not switching to bullish just yet. But there's some things that are starting to look bullish, and some of the other IWM, it broke out of its downtrend line on increasing volume here, so you can see the volume's going up. So a breakout on increasing volume, and then yesterday we had. Or on Friday, So yesterday we had quite a bit of buying volume as well. But this could just be, a bull trap. But slowly but surely, it's starting to look more bullish. And I have there's three scenarios that I see playing out, but they all end the same way. And the first scenario is gonna end. They all end in a big crash, and it's gonna be when the credit markets. Something's going to break in the credit markets, and I believe it's going to happen this year. Something's going to happen in the credit markets because the Fed has raised rates too high, too fast. Now I know they made a law or they changed something with the overnight repos where if the overnight lending rates get out of hand and they shoot up too high, too fast, that they can step in and lend money to these institutions, or that they can set the rate. Make a ceiling on the rate to where it doesn't go up too much. It's, I don't want to get too much into it, but it's almost like they kind of rigged the market to where we wouldn't have, where we could possibly have a soft landing, and so that, I guess, that is a possibility, but I don't know. I just don't think that they're going to be able to pull it off. So, but the three scenarios I see happening is, okay, one. So for instance, on the QQQ would come up back here to around 333. So that's another, 18%, 17, 18% to the upside, and make a lower high there, while the Dow Jones, can move up, maybe another 15% or so, and make a new high. And at this time, I believe something will have broken in the credit markets, and then we'll start the next leg down and start a big crash. So um, that's one, where we come up, make a new high, and then crash. The other one would be if we just came down now, to made new lows, come back up, make the new high, and then crash. The third scenario, um, and the triple Qs, it really, on the monthly chart, looks like this would be the most probable from a technical standpoint, but some of the um, other things don't match up, like with the yield curve, and I've said this in other videos. Usually, after the yield curve inverts, you go and make one more high before the crash, and so this scenario doesn't match up with that. But where we would come down, make new lows, come down to, around this pre-COVID high of 237, try to get back above these lows and fail, and then crash. So those would be the three scenarios. Basically, this: either we come up here, with the Qs, I think it would be a lower low and then come down and crash, or come down, then come back up, then crash, or come down and then have a small bounce back up but not get back above the lows and then crash. So those are the three scenarios that I believe could play out this year, all ending with a crash. So yeah, it's something that I really believe is going to happen, because they just raised rates too high too fast. We can't, the market can't handle these rates where we're at right now. I think if we just would have raised even to, say, 1.75% and just kept them there, I think within 18 months, 24 months, even 1.75 would have been too high. As crazy as that sounds. So, and then the bottom's always going to be when they start printing again, and so there'll be some reason to print again. Usually, there's some kind of crisis that matches up with the crash, and it makes it easier for them to print again, because it's like they're saying, the whole economy is going to fail, and life as we know it's never going to be the same unless we can print more money. And so nobody ever complains. They print more money, and it goes up every time. I think in '08 it was $1 trillion, and this last time it was 11 trillion, and so the next time it's probably going to be 20 or 30 trillion. So but yeah, so those are the three scenarios. But as far as short term, like I said, this could be a bull trap, and we could just come down here, and that would make like a little head and shoulders. I know a lot of people are seeing this. So there's one shoulder, here's the head, and here's the start of the right shoulder. We come down to this trend line, which I think I've talked about this one quite a bit on this channel, is that this trend line goes back to 2009, and it's connected to the 2020 low. Tagged it here perfectly, and have bounced each time. So this would be, let's say, 1, 2, 3, and this would be the fourth time it breaks on the fourth. And this head and shoulders, you go down. So the neckline would be here. The length from the top of the head to the neckline would take us to about 236, 237, which is the pre-COVID high. So that would make a lot of sense. But let's keep an eye on it and see. It's earnings season. We've got a lot of tech earnings coming out. It's not my favorite time to trade, and then we've got the Fed meeting also in a couple of weeks. So I really don't think. I mean, I personally don't like to trade leading up into the Fed meeting. I prefer to wait to the day of, usually after they announce what they're going to do, and just kind of take it from there. But if I see some opportunities in Bitcoin or something else next week, I still have some puts. I switched to SPY puts. I think well, I forget what the Q puts were exactly that I had, but I switched them over to SPY February 3rd still, and they were 380 puts. Quite a bit of them. I sold half of them on this move down. I sold them on this day here. My average cost was 150 a contract. I sold them for half of them for 360 here. So the other ones I'm holding. I'm holding on house money, and I think they're worth maybe $1.40 a contract right now. So I'm still holding those just in case this was just a bull trap and we start coming back down and sell off hard. So that's the only position I have right now is the 2-3 SPY 380 puts that I'm just going to hold those probably till expiration, whether they're worthless or if we get some kind of impulsive move down, and they'll pay out pretty nicely. And if we look at the S triple Q real quick, there was a falling wedge here that we broke out of, kind of back testing and holding this gap. So I wouldn't be surprised if the move on Friday was a bull trap, and so the S triple Q would break out, head up, the Qs would head down, and on the VIX, if we take a look at the VIX, it kind of has this bullish divergence look where you've got this. You've got this low here. You've got a lower low in price, but you've got the higher low in momentum. A lot of the times after a bullish divergence too, on the one day you'll get a pop, and then you'll come back down a little bit, and then you'll get the big move up. So we'll see if that happens on the VIX. We have hit the 50-day probably 3 or 4 times and have been rejected. So I think maybe if we can't get above it on the next go to the upside, then I would say we're going to be in that scenario where the SPY is going to go up and make, possibly a new high, or at least come up here to, 431, and the Dow Jones makes a new high. So we'd be breaking the trend lines back above the 200 days. Everybody's going to think we're in a bull market, and then that's probably when the rug pull is going to come. So we'll just keep an eye out. But again, if there's some opportunities next week and I see some trades, I'll make some videos. I want to say thanks for watching, and we'll see you next time.